let's kick it off with this because, everyone on Wall Street, they're looking for the next high flying stock because they make great headlines, but you need to read the story below the headline. For example, Carvana, the car retailer, they'll buy or sell your car online, even deliver it to your house. I have friends who have utilized Carvana. They've had good experiences. It sounds like a great service. In 2023, shares of Carvana rose by more than 1,000%. If you just stop right there, you might want to buy this stock. But if you go a little further, look under that headline, you look at where Carvana was in 2021, they still end the year down 86%. Now, most people decide to buy a stock or decide on a 401k fund by looking at past performance. There's a disclaimer that we use in every show. Past performance does not dictate future results. What is wrong with that practice, looking in the past, and how can you help people do better than that?
Well, when you're looking at what is the formula for picking stocks, I do agree with you that past performance does not really dictate what the future outcome is going to be. And even in the examples of some of these high flying hot stocks, I mean, with social media today, what you have is anybody's willing to give you their opinion on what a good investment is, or what the hot investment is. I see it on some of my social media that's out there. The first thing is I caution you to make sure that you check into the background of the person who's giving you financial advice.
Hmm.
Also, you'd want to look at maybe what is their motivation and to giving you advice. So some people say, get completely out of the market. You want to put your money in precious metals. Oh, by the way, we can help you buy precious metals. And, some people say, don't put money in annuities. And, oh, by the way, put it all in the stock market. And by the way, we do the stock market. So you kind of have to know, what is the outcome. But what I'm going to do is I'm going to give our listeners, what I believe is my 30 years of knowledge of trying to figure out, what the formula is for picking stocks. In fact, this is something that I go through every single time that we have somebody come in the office. And what we do is we offer what is called our retirement team action plan. And so within our retirement team action plan, it's 4 sections. The team stands for taxes, estate planning, asset protection, money management. And when we go through the team action plan, in this particular topic, we're talking about the M, the money management optimizer and stress test. And one of the questions that I'll ask folks is they'll be sitting, down with me, and I'll ask them, explain to me what the methodology and philosophy it is in your current investment approach. In this example, the result was somebody had talked about picking investments in their 401k based upon past performance. And in fact, I do hear that happen a lot of times. People will pick investments based upon past performance. I don't believe that's a disciplined investment strategy because, again, what happened in the past may not, happen in the future. I'd also say that, 60, 70% of the time, people will look at me kind of like a deer in headlights, meaning that they don't truly understand what their investment methodology and philosophy is. And what's concerning about that is the next time there's a challenge overall within the markets, and the markets get a little bit volatile, to me, somebody who doesn't understand the formula for picking stocks is probably the most likely one to make more of an emotional short-term decision about
Mhm.
when to buy and when to sell and when to get out. So again, a part of this retirement team action plan, this is something that we give complimentary for our listeners or people that have over $250,000 of investment assets, is we begin to kind of help them develop what is called their investment policy statement. And when we're going through this, the characteristics to me that really kind of jump out as some of the key principles, at least when our office is looking for advice to give somebody about what to own, is number one, we typically look for companies that have a high cash requirement. So they have to have a minimum amount of money in their bank account. The second thing is we look for companies that have to have a low debt. It's been my experience in 30 years looking at recessions and when times get tough, companies that don't have a lot of cash or have a lot of debt, or even families for a matter that live that way, those are the first companies that go out of business. So if we can identify high cash, number two, low debt companies, hopefully we've identified companies that if we have this recession coming up, that are going to be strong enough that they can not only, weather through that, they can actually be able to be in a position to take advantage of the opportunities, maybe of their competitors that aren't in such a good position. Number three, we want to look at the profit margin. So we want to look at profitable companies, and we want to establish a benchmark for this is what we want to look at when we look at the profit margin for companies and like return on equity. Number four is we want to look at companies that have a competitive advantage. There's a lot of different cell phone companies that are out there today. I think some companies have a competitive advantage over the other one. If we look at the internet and I go on the internet, there's a couple of different search engines that I can use to find information on the internet, but there's one dominant leader that has a competitive advantage. If you think about shopping online or different companies like that, there's companies that right now have a competitive advantage. I love companies that have a competitive advantage.
Mhm.
And then the last characteristics are companies that are needed on a daily basis. In my house, since we were gone for traveling with my son and the DC trip, we let our groceries kind of get a little bit low. And I know when we got home, one of the things my wife said is, "Hey, I'm going to go to the grocery store. I'm going to hit a couple of different stores this week. What do you want?" And I think daily essential companies like the grocery stores, the cereal companies, the cleaning supplies, the things that we're going to need every day tend to be even a little bit more defensive in an environment where things get a little bit more challenging. So even if we're in a recession, my kids are still going to get up in the morning. They're going to have their breakfast cereal. I'm going to clean, the counter with some cleaning supplies. My wife's still going to go to the groceries. Maybe she'll be a little bit more conscious about what she searches for. And then the final thing from that is once you understand what you own and why you own what you own, the next thing is you want to decide whether you want to have circuit breakers on a portfolio. So what circuit breakers are circuit breakers are a clearly defined entry and exit point. So if you're thinking, hey, right now, should I be more in fixed income or should I get more into the stock market because of what's happening with the economy? Again, trying to define what that entry and exit point is, what circuit breakers are all about. So if you want to learn more about that approach and the formula for picking stocks, I love this discussion. This can be part of what we do. Again, is one of the four components, and what we offer is again complementary to our listeners that have more than $250,000 in our retirement team action plan. So we're going to look at the T, the tax savers checklist and tax roadmap for 2024. We're going to look at number E, which is your estate planning blueprint. We're going to go over A, which is your asset protection game plan, talking to you about navigating the healthcare environment, actually making things affordable, and then how to put a shield around your assets to protect them from long-term care. And then the fourth section, like we talked about just now in this section, is the money management optimizer and stress test. So if you want that, just call the office, just ask for the retirement team action plan, and we'll get that put together for you and help you become a better investor and developing a formula for picking your investments.
That phone number is 419-794-3030. Once again, that's 419-794-3030. If you're a longtime listener or viewer of the show, you'll know that this investment methodology is not something that they've just developed kind of overnight. This is something that they've been talking about for years and years. It is the way that they've looked at the investment process for a good while now, and it is something that seems to be pretty tried and true. So if you want to figure out your current investment methodology, maybe see how theirs works with you, take advantage of this retirement team action plan offer. If you've got $250,000 or more of investable assets, pick up the phone, give a call, 419-794-3030, or you can reach out to the website, and that's at arhq.com.